Hey folks, Alex here, 9 to 5 to Freedom. In today's video, we're going to cover what's happening in the market, give an update on my portfolio, give an update on the government shutdown and how that's going to impact the market, and we'll wrap up the video with some Q&A. So I'm going to read some of the questions that I'm going to answer on this show. So thanks for watching. Thanks for subscribing. If you're new to this channel, I document here my journey investing into high yield dividends that will one day replace my job. This is just my story, so don't take any of this as financial advice. Always seek professionals for that. Let's hop right into it, folks. Okay, so we'll start with the market. And we had a little bit of a mixed bag today, folks. A little bit of a mixed bag. S&P 500 was flat. Dow was on the high end of things, 0.68% up. NASDAQ slipped about 0.25%. Russell down 0.3%. Volatility indexed at 1.3%. And gold slipped 0.29%. Okay, so obviously the largest thing is the news about the government shutdown. As I said, they are looking to vote this evening. So we're going to refresh our page here. We're going to see what this, let's see here if there's any updates. Let's see what BBC says.
End of the year. Republicans have actively restored a responsible line-by-line process. Over the next few months, we will continue this work and efforts through regular order. This Article 1 advancement is an accomplishment that every member of this chamber can be proud of, regardless of party.
Okay, we got you, buddy. Hopefully this evening they will vote something, and hopefully it'll actually open up. So looking forward to that. Let's hop over to my portfolio. As you can see here, it slipped quite a bit today. And yeah, so we got, we're sitting at very flat for the day. For the after hours, nothing really going on. Wpay here, as you can see here, this week we're down 0.83%. For the month, we're down 6%. For 3 months, we're down 1.29%. So overall, this is, I think, what gives me a little bit of hope. Obviously, my average price is a little bit higher. It's $53.50, where the launch price was at $50. So we have, you know, we're still above that launch price of $50, and hoping to see a little bit of a rally on some of those underliers to get us back to the $52, $53 range. Obviously, with the amount of volatility we had, you know, we've just been kind of on a decline since end of October, so looking for some positivity there. Okay, so let's take a look at the other tickers here, how the other ones fared. Eggy was down today. Maggie slightly slipped. The gold was up 1.5%. QDT slightly up. XDT up 0.4%. And blocks down again. Now blocks, folks, this one has been really going down quite a bit. I'm down 14% on this position. I don't have too much money in here, but I just, yeah, it's obviously all the crypto stuff's been very volatile. Bitcoin been on a downward movement, so you know, I'm glad I'm not like heavily into this because it's been getting hammered really. HOW up 0.78, and let's take a look at the Wpay tracker. These are all the underliers that Wpay holds. Now, one of the things that helped us out today was AMD. That thing was a rocket today. Netflix, small recovery today. Berkshire Hathaway, and most of these were kind of flat. Now, some of the offenders: Palantir, Facebook, MicroStrategy, Tesla, Amazon, Google, and Apple. As you can see, all of these positions have dragged us down on Wpay position. Now, I really hope that Roundhill will take MicroStrategy out of this blend, because this thing has been really hurting us. for the last few months. Okay, so that's the portfolio here. I'll just briefly mention my next moves in case you missed my last video. I really want to get back to my average cost basis for Wpay. And what I want to do is really bring down my margin. Right now, I'm sitting about $100,000 on margin. Let's just take a look here. $103,000 on margin. You can see here my margin maintenance requirement, $80,000, and I have a buffer of $93,000. So I really like to bring this down and just relax a little bit in case we have a big pullback. I'll be in a better place, be able to withstand anything. And with Wpay being so volatile, I almost feel like it's not the best thing to have margin on. So, but yeah, that's just my next steps here with this portfolio. Really hoping for a little bit of a rally towards the Thanksgiving season to get us back to what the portfolio used to be. And that I think I was like at 190 at the highest point here back in October 8th, 193. So it's been down quite a bit since then. So, but that's what I got going on. We'll hop over to our Q&A. So I'm just going to read a few questions and try to answer right on the show. I had some good feedback in the past here, so I'm going to do that next. This is awesome. Just subscribe, looked at the site. I have WiMAX and Wpay recently just to see. After doing back tests, and both to me it looks dumb to be in WiMAX, and I'm debating moving towards Wpay. Any thoughts on doing that or not? So I don't give any financial advice on this channel. I just document what I'm doing. You have to do your own research and do your own, due diligence to figure out what's going to work for you. Now, that being said, I was briefly in WiMAX in the beginning of this year, back in the springtime when I was really testing the different funds. And one of the tools I like to use is Dividend Channel. By the way, I have all the tools that I use on our Discord channel, so make sure you join our Discord, absolutely free. So hop over to there, and I'll have a channel there with all of the dividend tools. And this is one of them that I like, which is Dividend Channel. Now, one of the things that you'll notice, if you plug in WiMAX in here, let's say we're going to go back to January 1st of this year. We're just going to compare this to the S&P 500. If you click chart $10,000 invested, you'll get the following chart. And I think this should give you enough information to kind of make your decision if WiMAX makes any sense. As you can see here, if we just compare it to the S&P 500, since January 1st, S&P 500 has actually beat WiMAX. And that's with dividend reinvested or dividend not reinvested. So S&P 500 has knocked it out of the park. So that's something to keep in mind. Now, Wpay, folks, it's very new. The underliers are, the stocks that are very volatile, very tech heavy. So again, it's hard to say what's going to happen next. Obviously, there's a lot of strong ones in there, but there's also some dogs. And, lots of things could happen. So be cautious. I'm very heavy in my portfolio on that, but I don't want to make it sound like, it's bulletproof. This is all you need. Move over to the next question here. Do you spend all your Wpay dividends? If not, use a bulk to buy shares of QQQI with them. This way you don't have to sell shares and QQQI will be free. So right now I am withdrawing from my portfolio as my account hovers around, let's say $180,000. I am paying off my bills, my debt, that kind of stuff. So I am using my dividends at this point. And that was really my strategy to utilize high yield dividends to pay down some of my personal debt and then to start snowballing and reinvesting into funds that I believe in. So thank you for that comment. Okay, so we'll move on to the next one here. I'm enjoying your content, good information. Think about small request. Could you please remove the background elevator music? It's a bit distracting. Okay, I removed the music. There's a handful of you guys who enjoy it. Lots of comments are saying you don't enjoy it. I'm kind of mixed on it. I've been, trying to find some music that might suit this channel, but this channel is not about music, so I don't want to make that priority. So thank you for that feedback. You'll want to consider beta slippage, volatility decay when it comes to leverage ETFs. It's not exclusive to leverage funds, but it disproportionately affects it. Something to consider. Yes, thank you for that. Great video. Hope you close to even with total returns. Right now, with the way that Wpay has slipped, I am not even. I'm in the red at this moment. So I hope the rest of the week we'll see a little bit of a pullback to at least break even. Okay, then we have this comment here from 240JZ. Still not going to show everyone the year-to-date, 1 year, and all time. I know you said you only been there for 3 months, but you should still show the later time frames, as the shorter time frames meant nothing at all. Even if you only in Robinhood for 3 to 4 months, the larger time frame should be green, not red, since it's taken total of all income and gains. Okay, so I think I've answered this in the past. I moved over to Robinhood back in August. Here's my year to date. This is only going to show from August. Okay, so I am year to date 1.32% up. Okay, this does not, include all the distributions and everything, but I'm not trying to hide anything on this channel. I've been very transparent. I have videos where you can go back and see how my Fidelity was performing. I will do some math here at the end of the year, and I'll show every single dollar that I have invested into these dividend funds this year, every single dollar that I've taken out, and what I have left over. And we're going to really figure out what I've actually made or lost in this portfolio. So I'm not hiding anything, and I think everybody will agree on this channel. Roundhill Alex. That's funny. I do like a lot of the Roundhill funds. You have missed out on a lot of information to get your very negative point across, and some of the stuff you're saying is very inaccurate. Maybe you should make a video on workaround and benefits of cash flow. And this was on my video, Is Yield Max a Scam? I've had this argument for the past year. I'm really getting exhausted by it. If the NAV of your fund goes down by 40 to 50% every single year, let's say you start out with $100,000 and your NAV goes down by $50,000. At the end of the year, your portfolio will be worth $50,000. If you then hold it for another year and it goes down 50%, you'll be left with $25,000, and continue to do that year over year. As you can see that the percentage is always the same. Let's say if it's Ulti and the distribution is 100%, it's always going to be 100% of the NAV. So if year one, let's say Ulti's at $10, it's going to pay you $10. Year two, when Ulti is $5, it's going to pay you $5. It's simple math. There's absolutely nothing to argue about. If you continue to reinvest in a sinking ship, you're just going to continue to lose all of your money. That's the way it works. And this is why I got out of these funds. Now, are there periods of time where you can get in and you can make money? Sure. There was a period of time when I got into Misty for about a couple weeks when I got the dividend and it actually ran up. Once I started seeing come down, I got out of it. And that was back in this summer. So I'm not going to have this argument. I think there's lots of YouTubers out there. Some are not even YouTubers anymore, that you can see how their portfolio have shrunk when they're using the distribution. That's the whole point. If they're giving us the money as income, your assumption should be that you should be able to live on it and don't have to reinvest it. If you have to reinvest it, then they're giving you way too much upfront. So if you want to make it less complicated, just buy the underlying asset and then just sell the shares as you need it, and you'll actually make more money. Okay, we'll do one more and then we'll move on. Okay, and the last question here, or I guess comment, NEOS is releasing a couple of high income ETFs that follow QQQI and SPY, just juiced up more. Okay, I'm not sure what those are, but I did go over to the NEOS website and I found that they released a new fund called NIHI, and this looks like, I'm just reading into it right now. So, fund seeks to distribute a high monthly income generated from investing ETFs that seek to track MSCIEAFE Investable Market Index. So, honestly, I'm not really sure what this is. Widely used stock market index created by MSCI measures performance of Europe, Australasia, and Far East. Okay, so yeah, it looks like it's tracking some kind of index here. But this one looks like they have expense ratio of 0.75%. It's a monthly payer, and this launched in September. So I wasn't even aware of this fund. Distribution's 9.72%. So I looked at the performance of the stock so far since it's launched. It looks like it's just been kind of going flat, where we're up 1.46% year to date. So interesting one. Not sure about it, but again, this is something with Neos I like, that they're not promising us the moon, and they seem to be able to hold up their NAV. So I wonder what those other ones are. If gmood1291, if you're watching this video, please leave a comment below which funds you're talking about or when they will be released. Okay, folks, that is all I have for this evening, so thanks for tuning in. And as I mentioned before, make sure you check out the link to our Discord channel and join that community, engage with some folks, and we'll see you in the next video. Take care, you guys.